Only 54,000 jobs created in the month of May. What does Pimco's Bill Gross have to say about this? Well, let's head over to Bloomberg Surveillance, where he is talking with Tom Keene.
To quantitative to QE2.
Well, Lakshman, we don't see a QE3. I think there's been too much discussion and dissent within the Fed to permit that type of program again. What we do see is an extension of the language. The language, of course, speaking to an extended period of time. And you would simply posit that if we have a weak economy like this and weak job creation that doesn't lower the unemployment rate but yet contains inflation around their 2% core target, then they will simply speak to a Fed funds rate that persists for an extended period of time, which in effect caps interest rates in the process. I mean, if you extended the period of time of 25 basis points out for a theoretical 3 or 4 years, that allows the 3 or the 4 year Treasury to sink close to 25 basis points. And so it does effectively the same job as quantitative easing.
Bill, what does savers do if we're in this economic slowdown? Lakshman talking about not a recession, but just a growth slowdown, I guess is the way I would phrase it. What should savers do besides own your mutual fund?
Well, savers should run. I mean, to a certain extent, many of them are captive. They depend upon their bank deposits and the safety of it, and they need their sleep at night, and there's no disagreeing with that. But to the extent that they can risk a little bit of their capital, then there are alternatives in real interest rate space. I mean, the Treasury market up to 7 or 8 years is negative in terms of real interest rates, and that's not a positive for savers. But if they took that money and, yes, invested it in a conservative stock such as a Procter or a Merck or a utility yielding 4%, then that's a 3.5% to 4% real yield in comparison to those negative real yields on the Treasury side. So you have to take a little bit of a chance in order to avoid getting your pocket picked here. So
Bill Gross is becoming an equity guy. Is that what I'm hearing here?
Oh, I've always been an equity guy. I've been chomping at the bit for years. I've told Mohammed this, and he says, Bill, when you go out to pasture, we'll put you in an equity pasture and let you manage some stocks.
That's good. Peter Bookvar out with job growth disappointment at Miller Tabak. Discouragingly, the average duration of unemployment rose to 39.7 weeks from 38.3. That is the most ever. Lakshman with a quote, please. Question, please.
Well, a question. When we have these slowdowns, right, they take people by surprise initially, and then they kind of adjust to the idea that we're slowing. And the follow-on question becomes, are we going to have a hard landing or some sort of double-dip recession or whatever you want to call it? And when you get into those environments, people do strange things, right? We saw a little bit of that last year. In the summer of 2010, and I'm just wondering, as people are trying to figure out how to orient themselves over the summer, if that presents any dangers and/or opportunities as we go into the summer.
Well, I think you illustrate the problem, Lakshman. In proverbial terms, it's spoken to as pushing on a string or liquidity trap or the Japanese syndrome, I suppose. I don't think the U.S. went that far. I think we caught it quick enough. I think negative real interest rates, which Japan doesn't have, by the way, because of their deflation, is probably enough to keep us above water. Is that sufficient? Is that sufficient bait, so to speak, to allow the private sector to generate jobs and to work effectively and efficiently on its own? I don't think so. I think we need a reorientation, really, of government jobs and a government support safety net, which we're not going to see over the next year or two, but perhaps
well, that is Pimco's Bill Gross on Bloomberg Radio Surveillance program, talking about the jobs report, but also the outlook for the economy.